Hello everyone, my name is Crypto Ranger and you're tuned in to Cryptopocalypse Now. In this video tutorial, I am going to show you how you can trade one of the best chart patterns in existence, and how you can instantly, overnight, see some actual results, positive results, profitable results, if you go through this video together with me right now. All right, that's the deal. That's what I want you to do. I want you to sit down, take a notepad, write a couple of things down, but most importantly, just try to understand what it is that we're covering here. It's triangles and breakouts, trading breakouts. Now, most people lose money. Breakout traders lose money because 90% of the breakouts are fake outs. Let's just get that out of the way. But in this video, I will show you simple methods how you can stay calm, rational, not FOMO in, and trade for the win. And in order to do that, not only do you need a good set of indicators that give you entries, exits, etc., confirmation of volume, but you also need to at least see when there's a signal. So first of all, the indicators always confirm whatever it is that you're seeing on the chart, not the other way around. The indicators don't tell you trade because there's a pattern. Trading patterns is the simplest and worry-free experience that you will enjoy doing in technical analysis if you only listen to my one advice, and that is stick to one pattern. Especially if you're a beginner, you only need to know one specific pattern to trade off of, and that, I think, is a triangle. And I'll explain what those are. You might start to get a few ideas already, but don't get ahead of yourself. There are a lot of little nuances that we must highlight in order for you to get a complete and deep understanding of the subject. Now, chart patterns is what makes you a winner. The ability to recognize price action is what sets you apart from those who don't. Plain and simple. These patterns form because of the tug of war between buyers and sellers. All the people of the world, all the market participants, whoever's in on the chart at the time trading the instrument, they're looking at the same charts and they're making decisions, and somehow that those decisions, they come together to create these patterns. Okay, it's just how it works. It's meta. Okay, it's beyond. Let's not focus on why it happens. It doesn't matter. The important part is that we must recognize them and act upon them successfully, properly. We have a combination of all sorts of chart patterns, and if you pick up any of the books that are available today on trading, they will teach you all about these chart patterns. They will show you what they look like, how to trade them, etc., because there's a classic set of rules that traders follow when they start out. And just like one hat, one size fits all is a bad idea, because that just doesn't happen. Everything is unique in this world of ours, and every instrument, every currency pair, whatever market you're participating in, has a unique personality. And so some of these things will only become apparent to you after you spend some time, some screen time with the instrument of choice. So in our case, we're covering Bitcoin. Most of the charts in this presentation, you will see they are related to cryptocurrencies. Channels, rectangles, triple tops, double tops, head and shoulders, inverted head and shoulders, cup and handle, Adam and Eve, etc., trend lines, ley lines, spiritual lines. These are all instruments in your arsenal that allow you to see through the price action and understand what exactly is happening, which side is dominant. Is it the buyers or the sellers? There's a very simple way to do this. And if you start off with triangles, I think it's the most common and also the most profound chart pattern in existence, because they're simple, they're easy to understand, they give you very good exit and entry points, and they have a very specific system to trade them, where these rules never change. They just have a slightly different characteristic when applied to different instruments or currency pairs. They're always presented as a foundational part of all the other chart patterns. I'll show you why. Chart pattern recognition is an essential part of technical analysis, and whether you believe that technical analysis works or it doesn't simply does not matter, because if you're a trader, you will use technical analysis. They're all the same across all time frames, meaning you can trade triangles on a 1-minute chart, 5-minute chart, and for you scalpers out there, if you're a beginner, just know that when you're starting out, scalping is a lot riskier because your reward and risk ratio is always off. It can never be measured correctly. You don't have enough time or space to prepare well for the trade. So scalping must only be done when you're well versed in technical analysis. Do not start scalping as a beginner. Word of advice. Now, these patterns are just triangles, and what I want you to focus throughout this tutorial is that if you choose to follow my advice, from here on out you will only look for triangles and variations of triangles as explained in this presentation to trade. If you don't see a triangle, you simply don't trade. And I guarantee you that once you get a hang of it, and you'll get a hang of it by the end of this tutorial, you will simply enjoy trading. It will never be the same. It will not be frustrating. You will know exactly what to do. Let's move on. One last part I want to bring up in this slide here is that I'm not a YouTuber. Okay, this is not something that I have been doing for a long time. I haven't been YouTubing prior to this channel, so you must forgive me if there are certain inconsistencies, or when compared to other YouTubers, I may lack in certain areas, but I excel where it counts, and that's trading. So I hope you understand that this is not the reason we're here. Hopefully my videos will get better, but I heard a few things already in our Discord channel that people are looking for a certain format, and I'm getting there. Just be patient, I'm getting there. Videos are long, etc., etc. This will all change with time. Eventually, naturally, we will evolve, and video content will be a lot better to digest, a lot easier, more enjoyable. But let's move on. So these triangles here, let's get this thing straight. A lot of the people, from what I understood, after having spent some time in the markets on social media, I've noticed a lot of the traders, if you go to TradingView or Twitter or maybe some other discords that you're in, a lot of the people will tell you, oh, it's a bearish pennant, it's a bearish flag, it's a bullish wedge, you know, etc., etc. And the problem with that, and this is a real problem, is that these patterns don't actually have any bearish or bullish applications. Okay, they're simply patterns, and only after a confirmation do they become valid, and you can call them as such. What I'm trying to say is that when people teach you or show you things about technical analysis, they go back in time and they show you something like this, what you see on the screen. Double tops, you have your little pennants, you have your symmetrical, you have descending, ascending wedges, you have all kinds of pennants over here, crooked, straight, elongated, short, all kinds of stuff. And a lot of the people will tell you that we're looking at a bear. Well, that's because they're looking at the past. It's seriously obvious after the fact. And I will show you how a lot of the people get tricked by these patterns because they simply do not know how to read them, or they do know but they don't have experience trading them. So let's cover that. Simply refer to them as triangles. This is your pattern from here on out. If you do not agree and you want something more, you can pause this video right now and come back to it later, but I'm telling you, it is better if you internalize this and make it your pattern. You start off with this pattern, and if you stick with it, you will enjoy technical analysis and trading at the same time. It'll make it so much enjoyable because you will just feel that you know what you're doing. Starting off with a single, most common and highly effective pattern such as the triangles is not only advisable but just a smart thing to do. So never assign any bias to these beautiful patterns, because they're just patterns without any there could be a reversal. There could be a reversal or a continuation, and different crowds with different agendas will tell you, you know, I would like to see Bitcoin go higher, hence what I'm looking at here is bullish. That's a bullish pattern. It has to be. It has to be, because I feel that it's going to go higher. So that's not necessarily the case, and I will show you why. So what are these triangles all about? When buyers and sellers come together, and you notice we often refer to the price tightening or coiling inside of a range. Usually that happens inside of some sort of a shape, some sort of a pattern. And I guarantee you, more likely it is inside of a triangle. The seller and the buyer power is equal during that time. When the price is being supported, it makes, in case of a symmetrical triangle at least, it makes a higher low and a lower high. And when they converge, when they come and meet together at the apex, a breakout is likely at that point. Triangles. During this time, market participants, they take their positions when we're inside of a range, inside of this triangle. And those who use technical analysis, they increase their probabilities of entering a winning trade. So people who are entering their positions based on feels or certain things they've heard, they're based on their bias, what they would like to see, not what the market is actually going to do, are going to suffer a loss. And it is good if they know some risk management, because they can minimize losses that way, but nevertheless, a loss is a loss. So technical analysis, while not magic, can work in your favor and never against. So be friendly to it, be open-minded, and accept it, because if you're trading, you will use technical analysis. So price compresses between support and resistance at the bottom and the top of the candles of a symmetrical triangle. Symmetrical triangle with the higher lows and the lower highs. There are also ascending or descending triangles, and they only have one resistance line, which is the support line or the resistance line at the top. I will show you some of the examples. The books and the gurus online will tell you that there are bearish and bullish patterns, and as I just mentioned, as a full-time trader or professional hobbyist, you would always confirm the breakout first without any bias. And so while you're looking at a live chart, there is simply no way you can say whether the pattern is bullish or bearish until after the fact. So do not be fooled by crypto trading gurus. Triangles are everywhere. If you look at this chart, this is Ethereum USD recently, and we have a symmetrical triangle here, another smaller symmetrical triangle here, another symmetrical triangle here, a triangle within a triangle. Now, I'm referring to these as triangles and not specific definitions like pennants, bullish, descending. Only when I describe something in our Discord channel will I mention ascending, descending, or symmetrical, so you can simply picture what it is that I'm referring to over here. Sorry about that. Okay, but all in all, they're just triangles. That's all we need to do. All we need to know. So they will tell you bullish, bearish. Now, in this case, for example, when you have price action with downward movement like this, usually you can see when the pole extends from the top to the bottom and then forms one of these triangles, ascending. This would be a bearish sign. However, you can see that a breakout occurs, a retest of the breakout, your entry point, and then it goes off to do its thing. Many would have expected this to continue down, depending on their level of proficiency. Now here's a little head and shoulders pattern. Let's pretend that you're not seeing this part of the equation. You're simply not seeing it. And over here, this is all you get. All right? There's nothing after this pattern. And so what do? How do you actually trade this and be correct about it? Seeing a double top like this and a head and a shoulder pattern surely means that we're going to fall. But there are many factors at play here, and one of them is this triangle here, which is a bullish triangle. And I say this after the fact because we're looking at a chart from the past. I can say that now, looking back, it was a bullish triangle. Classic bullish descending. Here's the classic textbook. When I say classic, I mean textbook patterns. Descending triangle, and even though it's similar in properties to this one, it actually is a reversal pattern, not a continuation. So how do we know which one's which? Well, stick with me. Here's another bearish ascending. See, it's the same as here, except this time it actually went down nicely and confirmed the bearish signal. If you go to our Discord channel, there's a channel called Cheat Sheets. And inside of that channel, you will find all sorts of little pamphlets that can help you along the way. PDF files and images that show you market structure, patterns that you can identify, and you can print some of those. And not only this place, you can go to the internet, you can go to Investopedia and just spend days on end researching and studying this stuff. But the truth of the matter is that there's a very simple rule set to these patterns, all of these patterns, and how to trade them, and I'm going to show you how. There's no complex math behind it. So breakouts. These breakouts occur when price gets compressed, coiled up from the pressure of the resistance and the support, when the buyer and the seller power is equal, and market participants take their positions. Some take long positions and some take short positions. In our case here, a short position would be a winner. But we don't know that until a breakout occurs. Like I said, you just don't know. So you need confirmation. Because yesterday's breakout was something that Bitcoin does a lot, and it simply shot right out of a triangle and continued, not giving anyone any chance to enter. It just kept going up and up and up, $500 move without any stops in place. So what do we do about that? First of all, the triangles are best measured and identified on higher time frames. The higher the time frame, the better. You will take less trades, and you'll probably make more money trading higher time frames long term, even though you'll have fewer trades. You have more time to prepare for that one perfect trade. Other traders will try to FOMO in out of fear of missing out, and you will wait and confirm the breakout. There's time, and you will win. They will lose. Much easier if you have an indicator-based algorithm, a technical system that confirms momentum, volume, strength, and other important factors when looking at these triangles, because like I said, it's not bullish or bearish until a breakout occurs and then confirmation follows. Myself, I use MarketSpy, indicator that we've developed exclusive to Cryptopocalypse now. But you can use anything you want, RSI, whatever works. Preparation to trade these patterns will account for 90% of your wins and also 90% of your time. Once a breakout is confirmed, you will look for an exit first and entry later. Here's what you need to know. When a breakout occurs, this is an ideal situation. A confirmation of 2 or 3 candles. This is a daily chart. A confirmation of 2 or 3 candles will give you an indication that this is a real breakout. And it has to be backed by volume. On this breakout of this triangle, we can clearly see that was a volume spike. And this is essentially all you need to know, that this is a legitimate breakout. You also have your momentum indicator showing you positive signs. I'm not going to talk about this indicator now, but let's just say it is extremely bullish here in this picture. The textbook scenario for breakout would be for price to shoot out and almost instantly fail and come back to the origin of the breakout or the apex where the breakout occurred. And this is your entry point, anywhere on this line. Now sometimes, like in this case, when a breakout happens, price never comes back. It never gives you a chance to enter on a limit order here. It just continues on and on and on, and you miss the trade. We will cover that also. But I'm telling you, the classical way to do it, the safe way to do it, is to wait for a confirmation. A breakout, once appears the above line here, you will need 2 or 3 candles to sustain the move and also see an expansion in volume to validate this breakout. When price comes back to this line, you have to be brave, you have to enter, and then manage your stop loss in case you're wrong and this breakout triangle decides to change its mind. Here's another example where this descending triangle broke down and never gave you a chance to enter. Here's another example. Here's another example. And so forth and so on. Here's another example. So most of the time in a volatile currency like Bitcoin, you're not going to get a chance. You're not going to get this perfect setup where you have 1, 2, 3, 4 breakout, price comes back, picks you up, and does 1,000% for your gains. The beautiful thing about these patterns is that it gives you take profit targets. Now, a lot of people, especially when starting out, they're wondering what their profit targets should be. So when measuring breakout triangles, expecting a breakout, because when you see a triangle, you know a breakout is going to happen and you're going to have a great trade on that triangle. No matter what, it will happen. So once you've identified the triangle, it is time to start preparing for it. We can begin to prepare the trade of the triangle when the breakout occurs and not before. So once a breakout happened, you enter the trade, not before. If you enter inside of a range, that's very dangerous because you're simply gambling. You're guessing. You don't know. You don't know which way the price will go. It doesn't matter if we're at the bottom or at the top. None of it matters. But there's a way to measure distance to exit. A typical 1-to-1 measurement of the base, meaning the start of the point A and point C over here, nearing towards point B. The base of the triangle and its pole can be used to approximate exits or take profit targets. In this case, you can see how I'm using the base over here to take profit at about here and here. Now, there are other factors such as resistance. An immediate major resistance that's in the way will invalidate this measurement, and you have to cut it short. And if it breaks out to this side, it might get pushed down by the resistance to come back into the triangle and continue on its way down. So you have to consider using the daily chart allows you plenty of time to prepare for such trades that are probable but also unpredictable. These green extensions are the remainder of the pole that you can put for take profit to. You can take 80% of your position of the table and leave the rest by moving your stop loss to break even, just in case it decides to reverse. In the classical textbooks, teachings, and YouTube channels that are all standardized, they will tell you very simple things, such as you have your leg, or the pole, as I refer to it. You have your base, the top of this candle and the bottom of this candle, initiating the first point of the triangle to come. The classical teachings, the gurus will tell you the breakout happens below, and this is how you measure everything. This is a very neat, nice, and professional looking chart. But the truth of the matter is that this will not benefit you at all, because you don't have an entry, you don't know how to trade this. They simply say that if this is the breakout, you should take profit at approximately this level. The purple line demonstrates that the pole, the size of this base over here, extends all the way to this yellow line, which eventually, after all this scary stuff, does come true. However, your entry would have been upon a breakout, a retest, the resistance retest, and your entry here, and then off you go. The continuation of the initial breakout. Now, this is a daily chart, and this is one trade a year that would have set you for life, so to say. Okay, so resistance test, take profit leg is the extension of this pole before price entered the supporting line over here at the bottom of the triangle, and we see it descending. And prior to that, price kept climbing, entered the triangle. This is a bullish continuation pattern, and many people would have expected this to break out to the top side, but like I said, you don't know until the breakout happens. So to measure the distance to your take profit, you simply take the base of this triangle using your drawing tool and paste it over here and over here, and you wait for the breakout in either direction. What I mean by that is that before entering or FOMOing in or market buying into it, first of all, you need to have confirmation. Your take profit target should be set already. You should calculate your position, risk allocation, and everything, and see if the reward to risk, if your risk is small enough and the reward is high enough to enter this position, you should have your take profit limit orders already in place for the size that you're trading. And the reason that's important is because once you enter the breakout, sometimes it happens so fast, depending on the time frame, that by the time you go to your exchanges box and input the numbers, and they say, do you want the limit order? Price is doing all kinds of things, and it tells you, do you want to take profit on market, conditional, or limit? So you set your limit buy here and limit sell here at these take profit once you measure the triangle. So this is preparation. This is the fun part. You spend time preparing for the battle that is to come when price finally compresses and reaches the apex. And when it finally does happen and a breakout occurs, no matter where the price goes, you will be ready to take profit and close your position without having to watch the price action and affect you emotionally, because you already have a set of rules. You set yourselves, you know the distance, you know what's in the way, you have identified support and resistance, and you're just waiting. You walk away from the trade. You have your stop loss and everything. You don't need to monitor anything. I disappear for days on end sometimes inside of a trade, and I only come back to see whether it closed or got stopped. I don't micromanage it. Fast way to lose money. Measuring distance to exit. Breakout traders lose most of the time. Breakout trading is dangerous, but it doesn't have to be. The reason they lose is because they jump at the first sign of a breakout. You know what I'm talking about. You're trading a triangle in a bigger time frame, but you're anxious and curious, and you want to see what is happening on the lower time frames, on the 15-minute. So within this one single bar, there's so much action. And when a little tiny needle or a full candle on a 15-minute chart breaks down below here, it is easy to FOMO in. Sometimes it's a fake out. And when a fake out happens, you just lost some money. And it's frustrating as hell because it seems like the market is against you, but it's not. It doesn't care. It just does what it does. But preparation is key. These traders who do that, they also don't confirm volume and they don't map the battlefield. This is a battlefield, and you need to know where your enemy sentries are, where they're stationed. So you need to draw your support and resistance lines first, then identify the triangle, then measure the base for the potential targets. Both ways, place your buy and sell limit orders, wait for breakout, wait for confirmation, confirm with your indicator, momentum, volume, and the volatility force. Then, only then, can you consider entering. Because now you have to make a decision. Do I wait for the price to come back to the origin of the impulse? Or do I market buy into it and ride the wave? Blue, orange, purple, green, small, long, bullish, bearish, flat. It doesn't matter what the triangles look like. They're simply triangles and can only be confirmed upon a breakout. I'll repeat that again and again until you get it, because that is what is going to make it a successful trading pattern for you. As fast as you can, you must get rid of the bias. This is Amazon stock looking at 24 hours and the weekly chart. This is the weekly chart, and we have a triangle. It doesn't look symmetrical or the lines are not perfectly connected, but as long as you have support, a diagonal ascending support, and then you have a resistance, a flat double top, forming some sort of a triangle with this invisible base over here, you have yourself a triangle. You measure the base from the top of this resistance all the way to the bottom. And look, if you look on the daily, look how noisy it is. You have a fake out where if you waited for 1, 2, 3 candle confirmation, I recommend 3 candles as a general rule. A lot of traders use that. There's a reason for that. Patient traders. They wait for 3, 2, 4 candles sometimes because it takes a long time. Because once they perform this trade, this is one trade for the year. They don't have to do much anything else. So it is important to zoom out sometimes and switch over to higher time frames to confirm things, but not lower time frames. Even the daily here looks uncertain and hard to understand. However, there's a clear triangle here with a fake out spike coming back to the bottom, being supported, and then there's a gap. When it shot up on the 24 hours, it never came back to give you an entry. So where would you buy? This is scary. On weekly, it looks like one big bullish engulfing candle. A breakout with lots of volume. Look at that spike. You see this volume bar? It's right here down below. So yes, this is a triangle, and sometimes you will see all sorts of triangles that may not even look like triangles. So once again, no bias, bullish or bearish, does not matter. Why do we care? We just want to see which way it's breaking out because that's where the money is. We want to make a trade. We don't really care. There's no attachment. Let's keep it that way. There's no perfection involved either. There's no, I have to cover the wick to wick or otherwise it's invalid. I have to use the real candle bodies instead, or I have to start with the wick and then proceed to the candle body. Doesn't matter what anybody tells you. All of this is baloney. What you need to know is that you have a rough triangle, you have a line, you can eyeball it. You have a breakout. Now you can start planning because you have identified a profitable setup. In most cases, and I forgot where the statistic came from, but it's ingrained in my head. Triangles, bearish or bullish, have about 51% chance of being a successful pattern. And what I mean by successful, I mean if it's bearish or bullish, are triangles more bullish or bearish is what I'm trying to say. Well, they're neither. 51% with a 51.4% on the other side for the bears. Bearish triangles seem to perform just a little bit better in most cases. If you take a good sample, about 700 of them, and you trade them all and then you put them all together, and you'll get that percentage. You'll get the 51% probability or accuracy that the triangle will play out. Now here's how to increase it to about 75% and make odds be in your favor if you follow the rules. So typically, most people 50-50, right? They don't know whether this will be a good pattern to trade or not, but let's make it be a good pattern to trade. 51% chance that the triangle will work in your favor for both bearish and bullish patterns. There will be more false breakouts than legitimate ones. 90% of the time, you will see a fake out first, and this is why you need a confirmation. You increase the probability of your successful trades by 20% using Confluence. A 3-candle confirmation is necessary when trading a daily chart, and even though it seems like, well, what about, Bitcoin breaks out and it's a big green dildo, man, I missed it all. It's too late. I'm late to the party. Like, god damn it, I should have just bought right when it started pumping. Now here's the thing. The daily will have a confirmation by giving you 2-3 candles that will go up and down. And eventually, if these candles are backed by volume, you can assume continuation. There has to be also momentum present in the setup. So when you identify a triangle and a breakout backed by volume and a 3-candle confirmation rule, you check momentum using any one of your indicators, whether it be RSI, wave trend, or RSX, anything. Volume has to be there. This is the only thing that can actually give you some strong evidence of a continuation pattern. Established support and resistance zones must be present at all times before you start looking for patterns. Support and resistance zones are an excellent way to not get sidetracked and lose a trade because you didn't see a major resistance in the way of a pattern. Whether it be head and shoulders, I don't care how big the cup and the handle or the Adam and Eve beautiful formation If there's a resistance, you're screwed. It will break the pattern. And this is why many people say, well, what happened? It's a head and shoulders. It was supposed to break down and it didn't. It was major support right below it at this head and shoulders and they didn't see it. So you have to map out your support and resistance levels. I have a video on this subject and I think you will like it. There's a link somewhere here. Look for it. Easy mapping of support and resistance levels. What you need to know about the calm before the storm is that volatility will drop to a minimum just before the breakout. This is the perfect time. Instead of worrying about the range and saying which way will it go, start looking for your triangle. If it's there, identify it, single it out, establish your take profit and stop loss, and then wait for the breakout. Wait and don't do anything yet. Wait for 2-3 candles, see how it stands, check out multiple time frames, and then consider entering your trade. Because if you miss $1,000 pump but still have 200, 300 to go, you can enter with a good position and make up for the loss, so to say. You actually didn't lose anything. You preserve your capital, you waited for confirmation, and now you have 200, 300 certain pump according to the base of the triangle that remains for you to take. In 90% of the cases, the initial impulse of the breakout will retrace fully back to the origin of that impulse. We have seen that many times in Bitcoin where the price pumps and then instantly comes back to the origin and it starts to retraces the retrace, as I say. Okay, and so in that case, you know that an entry is very preferable when the price comes back because it's being generous to you. But you should know that once a breakout occurs with volume, even if it comes down, it is time to enter a position with a proper stop loss. Never FOMO in as soon as price starts spiking. Never have those jingle bells installed on your computer where it goes dim, 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 dim. So never FOMO in. Confirmation is everything. Now, once it's confirmed, it is time to take a position. So just like a battle, Sun Tzu, he said 90% of your victory will be preparation. Jesus, there's a whole conversation happening inside of a Discord. By the way, our Discord is a very good and fun place to congregate and talk about all things cryptocurrency and trading. We have some excellent traders and fun people in there and a very friendly community. So I encourage you guys to go and but join our Discord, because that's our website. Okay, this is the new 21st century type of a website that we have. It's a forum. There's a music channel, a trading channel, signals channel, all kinds of things. So upon a strong breakout confirmed by momentum and volume, a patient trader, you in the future, will finally enter a position. You have calculated your risk to reward ratio using the calculator that I provide the link to below. You calculate your stop loss and exit beforehand, before you enter a trade. All of that has to be done before trade. So this is why I say that I spend a lot of time looking at the charts. I mean, I enjoy it, but then I spend even more time preparing the trade. And if I take too long and the trade runs away from me, well, you know, that's what are you going to do about it? So never chase it. Let it come back to you. When a pattern comes to you, welcome it, trade it. There are two types of bulls and bears. And which one are you? Now, the strong bulls, they will buy the first candle close, meaning when the initial breakout happens out of this range, out of this triangle, an identified triangle, whether it's ascending, descending, symmetrical, doesn't matter. Forget all that. A triangle is a triangle is a triangle. When a breakout happens, a strong bull will buy the candle close. He will not, the price will retrace maybe. He will still buy it here. This is why when you use tools like Scalpex where you monitor BitMEXC volume or things like that. This is why you have $1 million buy, $1 million buy, 10 million, $20 million buy, market buy. Do you know how much fees and slippage on that is? They don't care. They know that this will all be covered because this is a very strong breakout, and they see volume. They see strong volume on the daily candle, and they just buy it. They miss all this, but they buy the top of it just to gain this candle, just to eat it alive, or maybe here. And since they measure their distance from this initial breakout, they simply take this and put the target, and they make a lot of money. This is one way that strong bulls will buy the first candle on close. Others will wait for a retrace, like this. Price, there's a small fake out, it goes back inside, finally a breakout. People will wait until the price to come back all the way down. Sometimes it goes even lower, fakes out, and then comes back. So they buy around this region, because there's no way in hell this is going to reverse like this. It might go a little bit lower and then come back, but don't believe the hype. It always happens in these two scenarios. Either a breakout that never waits for you, most of the time, in Bitcoin at least, or some other calm ones like currencies, the Euro USD, for example, or stock. Stock is always, it always comes back and gives you a chance to enter. It's a bit more relaxed. Not always, but I observed there are more cases of that happening than a sudden breakout and then like FOMO continuation, because the market is very illiquid. Once they start buying, there's no way to suppress the price back to its origin. Very rare. So others will wait for a retrace, and same goes for bears. When it breaks down to the downside, bears will do the same. A bearish candle that is strong in volume and there's no resistance down below, people have no problem buying on that close, on that candle close. So once the candle closes, because sometimes what will happen is that it will drop and then start retracing, boom, and you have like a dragonfly doji pattern, a candle with a tiny body and two wicks from both sides. So bears are strong and bulls are strong who buy on the candle close. The more conservative ones, the weak and the bears and the bulls, they wait for price to retrace to the apex, back to the apex of the initial breakout, and they buy there, and price may go sideways a little bit like this and then eventually climb up. Okay, so there are two ways to do this. They don't wait for the pullback, the strong bears and the bulls. And for beginners, a lot of the times it's like, because they have been burned before by buying into a fake out, a market buying like the first sign without doing it properly, they're now traumatized by this, and they say, you know what, if you do this, you always fail. If you buy the first candle close, but you know what, that's not the case. Follow the big money. So these triangles, are they a continuation or a reversal? You have to go with the trend without knowing what the trend is, meaning trying to guess the direction is very dangerous. First of all, you simply don't know. Is this a trend continuation? What if this triangle is the top and it's time for a reversal? What if? How do you know? The market doesn't owe us its direction. It's nonsense for us to sit here and be able to have the luxury to sit and predict the market. We're no authorities. The market will demolish you. There's no way to predict what will happen in the future. You have to trade what is right in front of you. And triangles and breakouts are the only patterns that you can successfully trade, because they give you entries, exits, stop losses, all of that confirmation. Look at the volume on this candle. Look at that volume on this candle. Do you see this? A breakout occurs, big volume, second candle, and then you can just market buy into the close over here on this candle and take all of this as your profit. It's not bad. It's not bad. A bullish or a bearish pennant sometimes can be found at the very top or the bottom before a full reversal. Here we have a continuation from last night. BTC 30-minute chart. just to show you that these triangles happen across, and we actually traded, I traded these, I gave signals, I told people, you know, I clearly demonstrated the measurements and which levels are going to be hit, our targets, and those were all met. So once again, strong bulls and bears are brave, and you have to be brave. They assume continuation, and the majority of the time, okay, listen to this, the majority of the time, a breakout is continuation, not a reversal. These patterns are continuation patterns most of the time. They are not reversal patterns. Do not be afraid to market order once you practice how to identify these and trade them successfully. Maybe paper trade a little bit just to see that you got a good sense of and a triangle is a triangle, you just can't miss it. But what you haven't been doing is you haven't been confirming it. You haven't been confirming it with a 3-candle confirmation rule, with momentum on your oscillator, your indicator, with volume, and noticing the support of and resistances from both sides of the price, so that your take profit targets are accurate. Oftentimes I make calls and say, well, you know what, we're buying and this is where we're exiting, and sometimes I say, you know, price will go to 1030, and it goes to 1030 and it hits that target exactly like a sniper. And all I do is I use these triangles to measure, because this is one of my favorite ways to take profit. That, or if there's a EMA or moving average, a major moving average like a 100-day or a 200-day moving average, those will be my targets. So keep in mind that an ideal breakout has to happen halfway through or 3/4 of the candle. Because if the price, if you notice a triangle that has price coiling in, becomes absolutely flat at the bottom, it is likely that this triangle is not a triangle at all and the market is building some other shape. Because a breakout is less likely the more price comes, contrary to the popular belief where people say that the more it gets compressed, the higher the chances it'll break. It has to, a good solid breakout doesn't wait, because market participants, what happens is that they understand what is forming. Algorithms around the world are starting to act upon the pattern, and it happens prematurely. So halfway through, as demonstrated here, or about 3/4 of the triangle, this pattern, this breakout will occur. This is how you will know that this is a legitimate breakout. Volume, your oscillator, all that goodness. Okay, so these are the basics that you can use and get started. And I want you guys to experiment with this and say to yourselves, you know, nail it on the wall next to you in your room, near your trading desk. Say that this is the only pattern that I'm going to stick with for the next 1 year. I'm going to master the goddamn triangles until I can just look at the chart and visually just like eyeball it and say, I see it, I don't need to draw anything, I'm entering right here. And you can start drawing with a paintbrush instead of using lines. You can just go, you know, entry here, exit here. And of course, you can maybe map support and resistance lines for greater accuracy. But these are the patterns that will turn you into a pro overnight, because not only will you be able to know your exits and entries points, you will also learn how to put a stop loss. And I'll show you quickly. The stop loss should be placed at the recent swing high, and I've chosen this pattern for a purpose here, for a reason, because you can see crazy wicks up and down that actually form a nice triangle. So you're waiting, all this noise, you're just waiting until you have something. Now you're like, okay, there's a triangle here, I can see there's a triangle inside of a triangle, so I can, you know, you're not seeing the bigger one, maybe not yet, but you can start seeing the blue triangle over here, and you can say my stop loss will be at Um, so do you see this resistance line and this support line? You want to place your stop loss over here. Okay. Now, yes, we're gonna talk about this, but the classic, there's nothing you can do about this. Stop loss, nobody, there's no way, there's no secret magic way. Stop. Either you're gonna get hunted or you're gonna get lucky and they won't notice you. But you will play, because this is such a perfect pattern here. This stop hunt had to happen to take these people out from the top, because it's a beautiful, beautiful triangle. Way too obvious. They know a lot of people put their stops down below here, and a lot of people put their stops down below here. Manipulation at its finest. But they do this across pretty much every market. The stop loss would have to be at the recent swing low. Swing high, sorry. And this would be over here, just at the apex above. Once we have a breakdown, a retest, you enter the position and your stop loss is here. Unfortunately, on this candle, when it happened, you got knocked out of your position. But the beautiful thing is that once confirmed, and again it went back down again, you had another chance to enter on this green candle to short. But now your risk to reward ratio is not that great. So if something like this happens, there's just nothing you can do about it. There's no way to prevent it. We don't know when it will happen, and it happens rarely. It happens rarely. You buy the close below the breakout. Basically, breakout candle, the second candle close, you have to buy that. The close below the breakout. Breakout initially from inside the triangle, went outside of the triangle, closed. Second candle closed, you buy the breakout. Now, as soon as you bought it, it started to go up and stopped you out. If you were trading this purple triangle and you did the same, you put your stop loss here, not here, but here, because it's a bigger triangle. Now your stop loss is here, but also your risk and reward ratio is greater, because look at this purple line. The purple line is the extension from the top of this candle to the bottom of this red candle. This is your triangle's base. A symmetrical triangle has a base which then duplicated and starts to act as a distance to take profit from the initial breakout. So breakout here, entry, and just hold it all the way to here. If you don't see any major support levels or anything like that down below, then you will have a clean. It doesn't matter what the price does over here, your stop loss is all the way here, but the risk to reward ratio here is great according to the distance to take profit and from your entry to the stop. This was a huge move. So maybe a 3R risk to reward ratio right here. Very nice. Now I want you guys to go to our Discord if you have more questions on this, and ask me personally inside of our platoon group. I will be able to answer some of your questions and help you turn this winning pattern as part of your strategy. Now, a lot of people say, what's your edge? What's your edge? They get overwhelmed. They're looking for so many things. They think the market is oversaturated with patterns. The truth of the matter is that price action is always the same. It's always the same because people are the same. The markets will never change. And this is the one pattern that you can stick with and perform well with. All you need to do is to confirm it with momentum, volume, and not do anything until the actual breakout occurs, at which point you will feel like you're missing something. You will feel like you missed out on the action. But these moves are so powerful and so great that, this initial pump candle, and you're like, oh my God. You simply buy the close of this candle, as all the strong bulls do, because you will have all that distance to yourself from the initial breakout, a continuation that will leave you in profit and with great reward. Okay, so hopefully that convinced you or helped you to understand how triangles can be traded exclusively. Support resistance indicator, entry exit indicator, your confluence indicator, your confirmation 1-2 indicator, all of that combined with these triangles will give you a winning formula to trade. In the next video we'll talk about excuse me, let me drink some water. In the next video we will talk about risk and money management, which is equally as important, to know what size can you assign to these triangles, because that's very important. And I have a link to a very nifty calculator down below. Download it for free. I don't have any promotional pages where it gives you a green big button saying, yes, I would love to get a cheat sheet that's going to teach me how to become a pro trader. Nonsense. Get it for free. Is the best tool that you can have outside of MarketSpy, our indicator, in your arsenal to give you perfect trades. If you follow it, if you obey the rules that are outlined in that calculator and basically follow the numbers, you will be a-okay. Disobey and you will lose money. Simple as that. Thank you guys for watching. I hope that we can get better at this, but in the future expect more of these tutorials, and if you liked it, hit a thumbs up, as they say. I would really like that. You guys are great, you're wonderful, and without you, none of it matters, none of it is real, none of it is legitimate. But with you guys, there's a purpose. There's a purpose, there's a reason, and I really appreciate your time. And hopefully this will really help you. And I'm not gonna hope, I'm gonna say it. This will help you. Okay? There's no hoping in these markets. Hopium is for the losers. We want to build winners. Okay? I lose all the time. But you know what? I trade patterns and I trade confirmations and I risk manage pretty well. And so when I enter my trades, losses, they happen all the time. But you know what? It doesn't really matter because I'm used to it. Every trader loses some, wins some, and keeps a good balance. And if I'm able to survive on this, if I'm able to live and provide, I have a family with 2 children and a beautiful wife, and you can do this too. You can do this too. The more time you spend looking at the charts, don't clutter your brain with big words like price action, liquidity pools, this and that. The more noise you have, the more it will be distracting. All you need to do is find a pattern, a triangle, treat it like a professional, identify it, see volume, confirm, use an indicator or two to give you a signal around that area. If everything falls into pieces, what are you going to do? What other data can possibly help you take that successful trade? None of it will. Okay? When I try other methods, because us traders, we like to always engage with new techniques. It's part of the brain is always hungry. I fail every time when I try to look at other people and when I try to duplicate their methods or anything of that nature, because it's too complicated. Because they and the more convoluted, the more complicated it sounds, the more they can sell to you. The more they can sell and the more they can say that, oh, it's so fancy. You start believing it and you stop trading. You start losing money, and then you wonder what is happening. Well, the secret was that all you had to do was stick to one pattern. So if you don't like these triangles, if you don't take my word for it, try something else, head and shoulders. See how far that gets you. I recommend you guys start with these triangles and you keep them and make them part of your trading system. Until next time, this is Crypto Ranger out.